YOLO trades. Yeah, we're going to discuss YOLO trades. When, if ever, guys, should we put everything into one position? Lots to discuss here on the risk side of things, but also when you get the moves that we've had in the market today, it's almost a little bit of hard to avoid when it comes to YOLO trades.
Yeah, look, a YOLO trade doesn't have to mean going all in on the trade. It can also mean putting like a normal size on and just holding for a much bigger move than you normally would because there's more upside. So there's lots of ways you can think about it. But the first thing you've got to consider is there the potential for that big break? Like, does it have the upside? Does it have a chance to give you that outsized move? Is the volatility going to be there before you even look at the plan? That's what you've got to identify first. I'm going to pull up VERU because 2 days in a row it gave YOLO trades. Arun had this one yesterday for a YOLO trade, which was better than the trade was today. But make sure you zoom back out, and when a stock has done something like this, like VERU, which already had a positive catalyst, made a monster run, I mean multiple runs. I can start with the daily chart to show you what it did before the $10 move. Like, it had broken out from $4 to $5, made a pit stop at 10 on the way to $17. But as it comes back down, it's got that squeeze potential, and you know it's there, and that's the key. When it could not retrace back, and I showed you that 10 on the daily chart, there's a reason. And then it held this level on Friday, and kudos to Arun for having this the next day when we came in, and it pulls that breakout. That is the definition of a YOLO opportunity. Because it's giving you a shot for tremendous upside. We're talking 11 to 11.50 break, all the way up to a $13 area before there's any real idea that it could slow down. And then on top of that, 14 to 15 up here was also resistance. That's a great return when you've got this nice double bottom in front of you. Like, that's a YOLO shot. It doesn't mean have no out. It just means that gives you your big risk to reward shot, and it's got the volatility to continue. Now, it gave you a similar trade today off of the afternoon support from the day before, but it's not as wide of a range. It's more this 13 up to the 14, 50, 15 area, which isn't quite as nice because you're buying the dip instead of buying the break. You were going against the grain initially to take that trade instead of just following the crowd when it was breaking out the day before. But you've got to identify, does it have the chance to go? And that's not always an easy thing to do, but sometimes it sticks out like a sore thumb. Low float, done it before, found support at a key level. There's your YOLO shot.
Yeah, I'm on the opposite spectrum there with YOLO and regarding anything related to that type of trading. I'm way too systematic, and I'm way too analytical with my risk. So I just can't get past the point of, hey, you know what? Let's just throw some money at this for the sake of throwing money at this. I can't do it. But going back to VERU's trade, although it was, everyone's in it for a different reason, VERU, as you can see from this chart here, I was actually long here in the pre-market. This is a trade we're talking about. I was long 11.31, and this is a technical setup. Then that's why I went for VERU. I will go after any trade that is technically sound. I don't care if it's a name that's hot. I don't care if it's not. I will go as long as there's enough volume, and there will be enough volume. I will take the shot as long as I can control the risk. That's what I care about, controlling the risk. I want to see the hits. If I'm going to take a hit, I want to see it coming first, right? So VERU, I know that 11.30 long. I liked it. I like the setup, so we went for the trade. We waited for it. We got out, some in front of 12.50, and then it continued going. At that point, it's just a management trade, right? I'm just managing this position, and we finally got out in front of 14 here late into the session yesterday. So if I were to now go back to this chart and be like, you know what, why did I go for the long? I can explain it to you. Not because I felt like it, not because I thought it was going up. It's technically, there was technical analysis. I guess my approach to making an entry is, hey, you know what, we got above this. There's some support here. We tried to go down. We bounced a couple times. We finally got above, shows enough buy side action. So I went for the long, and I can justify that long being like, you know what, this risk was worth it because I have the reward. Now, I can explain it. That's my approach. If that's YOLO, then sure. But I can explain it. I can get past that point. But I'm not going to just throw money saying, you know what, here's a lottery ticket. Let me just see if I win on this. Because I can use that capital elsewhere to make some money, right? So as a trader, I find that that's what you got to do. Where do you deploy your capital? And as long as you're strategic with how you deploy your capital, then it's trading. It's not YOLO. But again, everyone has different approaches, and to each their own. It's just my approach is more analytical, and I just like to see where my money's going and how much I'm going to be putting up in risk. And there's times where I don't take the trade because the risk is too high, and that's just part of it as well.
Understanding exactly what your trade setup is and understanding exactly what the risk involved in that trade setup is the key. Yes, there will be times in the market when putting more risk towards those trades is definitely worthwhile. So a great couple of points there, guys, on YOLO trades.